I'm just using the camera for the first time, so please bear with me. Okay, in this video I'm going to show you how I caught these two banger trades, and I took two L's as well. So first we're gonna talk about the winning trades, and then we're gonna talk about the losing trades. I don't think so we need to talk about the losing trades because they were basically me entering the market a bit early with a very tight stop, right? Actually not very tight stop, but just entering, right? So this is from Tuesday, right? We are only trading the New York session, right? So we are not trading any other sessions. So just let me just hold on. Okay, so we are only trading the New York session. So what exactly made me take these trades, right? As soon as we open in the market, let's get rid of this, right? Yeah, as soon as we open in the market, I think I'm speaking a bit too low because my friend is sleeping. But as soon as we open, which was this day, hold on. All right, as soon as we open in the New York session, you see we sweep these lows, right? Just before the market open, we sweep these lows all the way down, and this was the first round liquidity that I had marked. So what exactly happened after we marked this low? We saw the price push up, right? We saw the price push up, creating this imbalance right here, correct? You can see this gap. We created this gap on the 15-minute time frame. For me, I was bullish, but since the higher time frame we are very bearish, I was only looking for shorts. I was not looking for longs. What happened is here we have this high marked here, right? You can see this was a London high. So what exactly happened? I don't think so. You can see we sweep this high. You can see the small sweep. We sweep this high and we close below. That shows a strong rejection, right? It's London high, we sweep it, and now we are looking to go down. So what exactly do I do? I jump on the 1 minute time frame. So my first and the most aggressive entry was right here. As soon as we had this close up, we close below, right? This was the entry that I took. Okay, I think this one got break even from this candle, and then the second entry was basically this inversion. As you can see, we have this bullish gap, and this is where I exactly entered, right? I went short at this touch of my stops right here, and I caught the move all the way till here. That's it. It was almost 1:3, and then I had to, just make my stop a bit smaller so I can get and then I added, I think, one more contract. This was the first trade that I caught for 1:4. I think 1:4 up. Then I had caught these longs as well, all the way from here. My stops right here. I caught the longs all the way till here, exactly here, right? Now you might ask me, why did I catch these longs even though we were bearish, right? You see, we had a huge sell-off in the upcoming day all the way down. Now why did I enter this longs? For me, this point, right, this candle, I mean, just look at this, right? This candle is the last down close candle before we had a massive push up. You see this big candle coming in. This candle was the last down close candle before we had a massive push up. So what did we do? We leave this imbalance, right? Now imbalance is basically for the early buyers getting into the market. We don't want that. We want to enter when everybody is out. Now this swing point exactly here had a lot of stops, and not this swing point. You can see we did not sweep this point, right? There is a reason why we did not sweep that point, is because this one did not cause a significant break to the upside, right? You can see we had these highs. It's all about highs and lows, right? It was just a small push up, but this one actually caused the big rally. So now this is the point where a lot of people have their stops, so the market needs to induce them. This is the way I trade, right? So what exactly happened? We sweep this, we come up. As you can see, as soon as we come up, um, the last for us to get a a change, or what's happening, for us to get a change, or actually I don't know, okay, some sort of confirmation, we did not close above this candle, you see, above this body. So in my mind, I don't want to take this trade because there is no bullish pressure in the market at that time. As soon as we sweep these, we come up, I'm not interested. What am I interested in? I see this bearish gap, right? I see this bearish gap all the way exactly between these three candles, right? As soon as we close here, right, my main entry was inducement of this and a failed structure over here. The moment I see this big up close candle here, right, I entered here, I put my stops here. Now this is a very aggressive entry because we did not inverse the fair value gap, the bearish fair value gap. We did not inverse it. For me to enter this trade, because I already booked my profit in this, so for me to enter this trade, I was like, okay, let me get into the aggressive entry, right? And we started chopping for a while. You can see all the way from 11:42 to 11:52 for 10 minutes. It was just chopping, and then exactly I had the big push up, which was almost for 1:4. So that was like almost a 1:8 RR day. And as soon as I saw this, I was not able to catch all the way here because I had a feeling like I was manually closing. I had a feeling we might be reversing because we are very bearish, right? So I caught this trade almost, I think as soon as it touched here, I closed it. I closed it manually. So these are the two trades that I caught. And you can see right, where is it? Hold on. You can see right here. This is exactly the long position that I took. You can see with 3 contracts. The short I took with 5 cons because, hold on. The short I took with 5 contracts because initially it was 3, and then I added 2 more when I saw like, okay, we are respecting the bearish bias. These were the 2 losses that I took because I entered the market a bit too early, around 780s and 7, yeah, exactly around 780s. Waited, and patience, really pays off. I will be doing more of these in the future. This is just basic concept. I'm not using standard deviation. I'm not using timing. I'm not using all the other things. These are just basic trades, right? Um, I would like to also go over in the next video for today's price action how you could have got these shorts all the way from how you could have got these trades, right? You can see the same pattern being repeated. You could have got these shorts, all right, something like this, all the way to, you can say, this wick right here. You could have got this, okay? You could have got this easily, like instant. That was an instant TP 1:5, right? And how you could have got another short all the way from here, putting your stops here, aiming for this wick. And you might be telling, oh, why are you not aiming for all these lows right here? The thing is, I want to take whatever is available on my plate. I don't want to chase every point. That's the most important factor you need to keep in mind, right? So we take another trade. Now, you could have taken this pump up because there was earnings from Micron, but I wasn't really aware about this. I mean, I remembered, but I never, trade that late. And you can use these are the indicators that I use just for marking the macro timing, the market opens, the midnight open, different profiles. This is the PO3 power of 3 trades, just so I can see the 4-hour or the hourly candle without switching the time frame. You can see we did this in the New York last hour. We had this push up. Yeah, that's basically it. Covering Tuesday and Wednesday's price action. Very clean, very a bit slow, but it's something not that crazy. Uh, if you're actually watching it, try to understand what exactly I explained in the video. Watch it once, or maybe watch it twice, and try to understand what exactly am I doing, right? And this is my Notion notes. I can, it's a private Notion. I can share the link, however. This is like the most, you can say, the safest and the most, how do I say it? This is I would just say, because it's higher time frame, you're not on the 1 minute, you're not on the 3 minutes, you're basically on 15 and 5 minutes only. You can see one of these examples right here, right? We have this high setup. Usually the high is set up during Tuesdays, and the fake high on Mondays and Wednesdays, right? Mondays and Tuesdays. If you understand weekly profile, which I'll be talking in the future, which I'll be talking about in the future, and then you can actually catch these type of trades. You can see as soon as you come closer to the order block, we don't actually get the entry, right? That's basically early liquidity build up. We get this 15-minute low broken. There is a change that, okay, we want to go down. Market pulls up, taps all the way to the London's previous day low, almost for 380 to 940, almost like 450 or 500 points, right? All the way down. And then 29th April, the same thing. As soon as we sweep the internal structure, now we are pushing towards the bullish structure, right? We come here, we create a liquidity. You can see the order block we tap, and what exactly are the results? You can see simply we tap on this order block and all the way to the top. Pretty easy, right? Then we come here for the mitigation entry. Let's say you don't want to go into the extreme entries, you want to wait for the mitigation entries. This is where you can take the mitigation entries. I also have some other models like MFR, and we'll be covering that in the future, but for now this is it. I hope you guys gain value, and I'll make sure if you want to stay, um, you know, if you want me to keep making these type of videos, just let me know in the comments. I barely check them, but it's for your own good. I All right, anyways, thank you for watching, and I have to talk a bit slowly because my friend is sleeping, so I don't want to wake him up. Okay, see you then.